Okay.
We are live.
Well, good morning, everybody. Welcome to our 10 a.m. Webinar. I'm here with Joe and a special guest today is Micah. It's good seeing Micah. I'm going to do the introduction to the call today while
do y'all hear and see me?
Yep.
Okay. Tim, I can do it. Thank you very much. Yeah, folks, we've had a little problem. Randy, who has half of this presentation because he's developed the Dogs of the Dow technique that we use. And about 5 minutes ago, I got a text from him, and he had to rush his wife to the hospital for an emergency operation. So he's not going to be here. So we will delay this particular aspect. And Tim and Mike and I can talk about other stuff related to our technique here, but we'll delay this particular presentation, the Dogs of the Dow, until next Thursday. Now, the reason this one is so significant is that the Dogs of the Dow is great. People that like dividend stocks and conservative, the top highest at the first of the year, January 1st, if the market opens, you buy the top highest yielding dogs of the Dow. And for instance, let me see if I still have it up here. Hold on a second. He had him on his computer. Let me see if I've got him here. Don't think I do. Hold on a sec. Here's some. Okay. Y'all don't see that, do you?
No, not yet.
Okay. Well, we have charts starting the first of 2020. The Dogs of the Dow, the top 10 yielding Dow stocks. Now, all these stocks have to pay a minimum of 3% minimum dividend, and they go up from there. And so you buy those. You buy all 10 of them on the first day of the year. The market's open, and you just sit there, get off your computer, and sit there. And in the course of a year, you're going to sell them all on the last market day of the year, roughly 12 months later, right? And what's happened is because these are the highest yielding stocks on the first day of the year, the highest yielding, they've got the lowest prices. And then as the year goes through, those stocks automatically come up and bid those dogs down, build those yields down. And so what you've got 30 stocks here. You've got good diversification. You got the entire Dow. Dow only has 30 stocks, and you're going to have profits in each one of those. You should have a profit. If you don't have a profit, you're not going to sell it for a loss. Maybe you just leave it in there and do it again the next year. But in the course of the year, you also get the dividends. So you've got the dividends. You've got what you wanted to do by having a dividend paying stock. But you got the whole mix. And you got the starting off the year with the highest ones. Now, this was first invented. I didn't invent it, but back when I was with Merrill Lynch, and we used to guarantee a minimum 10% return, which was unheard of, and typically it would exceed that 10% return. Now, Randy has a specific technique, and pretty much using the standard materials here of getting into those positions. But the difference is we go out each month and we sell an out of the money put, substantially out of the money. And if you get caught out of that, that's not a put, but an option. If you get caught out of that option, then you've gotten what you paid for the stock plus a substantial profit. And it's typically going to happen when the stock's making an inverted V. It's going to come on down, then you're just going to buy back and you've recovered that profit. Plus, you got a good premium for just selling that put. So you've got not only a profit in the stock if you get called out, but you've got your profit from selling the call, and then also you still collect your dividends. That's the basic. Now, what we've done since then, we're going to go over that and teach that, which we've done once before on here. Now, those are expensive stocks, or Dow stocks, so they're not penny stocks, okay? So now we've devised it where we take the same Dogs of the Dow, we pick out the 10 highest yielding, but we don't buy the stock. We buy the call, the 4-out call, and then we sell against that. So now we're spending a fraction. Instead of spending like $300 for the stock or $75 for the stock, we're maybe spending $2 or $3, and then the returns are substantial because we're still going to get the higher price for things are called out later on anyhow. That's what we're going to be teaching. Heck of a technique, and but I can't do it today because he's got all the stuff on his computer, and so we'll just do it next Thursday. So in the meantime, let me get back over here.
I want to give a note on that as well. It's
Sure.
true. We're coming up on tax time, and one thing that I always laugh about during tax time is like the core concept of taxes is very simple, and then we pay in, and then we benefit society. We're all good. It's very, very simple.
Mhm.
Right. But what it ends up being in our country is not even so simple. It's about all these different exceptions and rules and modifications and all these things. It's kind of like the English language. There's a basic set of rules, and then there's even more exceptions to those rules.
Boy.
So when it comes to something like taxes, it's very easily understandable to us as, all these things we have to do to try to take this advantage and to try to not even take advantage, but to just keep up. And, we have to figure all these things out. But once we do that, the amount of benefit we see is obviously quite substantial versus, had we not done all those things and moved the assets where we need to, made the transactions we need to. So the same thing really with your account is when we buy stocks, right? We have those stocks. We don't just leave them sitting there. And that's what Joe's talking about. Like we can buy, investments for the year and buy the stock and, be on our W-2 and pay our taxes. And it can all be very simple, or we can get a lot more advantage out of it because we can buy these certain stocks and then employ options and calls and puts and do these things that are just incredible.
Yeah, you got a good point there, but the difference is in these, like in our other techniques, we just suggest you do them in a 401, probably not a 401k, but just in an IRA account, because you do an IRA account, you have simple transaction, you have no taxes unless you pull money out to spend it. So that takes care of all of that. And we don't mention it so much most of the time, but whenever we're talking about, particularly in our micro moment trading that we do every morning, we mention the fact that so not every day, but probably a couple times a week, you need to be doing this in an IRA. You can't really do it in a 401k because you're not managing your own 401k. Somebody else is doing it, and they're not going to have time to do it. So just do it in a regular IRA, and that way you alleviate all the problems that you're talking about, because that would be a problem otherwise.
Yeah.
Right. And isn't it some of the only trading you can do in your IRA?
You mean individual?
That's allowed to do?
No, you can do your own trade. Anything you can put in an IRA, you can do trade yourself. 401ks are always corporate. In other words, a company does a 401k, and they contribute money to it, and you contribute money, and then they typically have somebody like a Merrill or somebody else that manages that 401k. But they're just managing it like a mutual fund. In other words, they're not taking your end and doing all these things, just for you, and that wouldn't be workable. No, but no, you can do it. You can do it in a 401k. Let's say you had a company, and it was your company, and you did the 401k, and you want to do it yourself. You could manage that 401k. I don't think you couldn't let other people. Let's say you had 10 people in there, you couldn't let 9 other people come in there and manage their own that way. But
Gotcha.
you could, just because it's your deal. But no, that resolves that problem. But this is just a super technique, we've mentioned it now a couple of times, and we have done, and we've given a demonstration a couple of Thursdays ago on the just doing a regular using instead of buying the stocks, we'd buy dividend stocks, but we'd just go with the call, and that's what we'd do. Or we started off just doing the dividend stocks, like using people that had existing stocks, and maybe they've had it forever, and they've been receiving dividends forever. So all of a sudden, then we come up with using our techniques, our micro moment techniques. We just take those individual stocks that you still got. I think you've got some, Tim, that you get dividends on, and we just take that stock and throw out there and sell that way out of the money call when the thing's at the proper place in the chart, and sit there and we still get our dividends. We still got the stock. If we get called out, we're now going to be able to get a big profit on it because we've got a way out of the money call that we sold. And then the stock's, when it comes back down, because it's going to happen at the top of the chart, we're going to go back and buy the stock for substantially less than we sold it for. That was the basic.
We've been doing covered calls in my wife's retirement account all year, and it has significantly increased the value of that account.
Because you still get your dividends.
Yep. Yep.
And you had no anticipation of selling the stock in the first place. So if you haven't, you make a lot of money by selling it. And usually what they just expire. So you get to keep, you still get your dividends, you still got your stock, and you get to keep the premium you sold the call for, and it's disappeared,
Yep.
And then when things go wrong and the stock goes way up and it goes up to, you got your $5 out of the money or something like $10 or whatever it is. Then you get that money and you just go back, and that's always going to happen when the thing's at the high. It's not going to happen when it's at low, because your internet is low, and but anyhow.
Yeah, it's really a great way to extend the returns on those legacy stocks.
Yeah. Yep, absolutely. Micah, you have any more thoughts on that? Hey, Micah, you have any more thoughts? You have any more thoughts on that?
Sorry, I was muted.
Oh yeah, well yeah, I don't think you've been on those other ones where we've talked those techniques through, so you kind of a little bit of disadvantage there. But
I did as a spectator actually, so I got to watch kind of how you did it. Some social media. For those of you that don't know, I do all the social media for the company. So I was helping out with the micro moment technique, which is everything sub 30 seconds to a minute option trade. And so we were doing that, and then I transitioned into the social media only. So we have Instagram, YouTube, Facebook, and LinkedIn and Twitter. So that's where I fit into all this. But anyways, no, I just love highlighting the fact that you can buy a stock and wait for it to go up, hopefully, or you can do a lot of other things to really. I understand why people say trading is gambling, but they're really it's not even trades we do hardly. It's just techniques that we employ over time, and those little things that Joe's talking about that you can do are just little. They're really operationally really little easy adjustments, right? There's not much different about. You don't have to learn a whole new anything. They're just little tweaks that you can do and make such a huge difference, because an inch here is a mile there.
Yeah, well, when we started off doing that, we started off teaching. Well, okay, you've got because we have from our micro moment trading, we have people that own stocks. They've owned them a long time that are expensive, Dow stock, or not necessarily Dow stocks, but stocks that they get dividends. They've maybe gotten dividends on for 25 years, something like that. And so we came up with, okay, now you're getting that. You're not going to get your forfeit your dividend, not going to do anything, but you're going to pick up, when you sell this way out of the money call, you're going to pick up some additional time. It's going to expire and you start all back over. And so we start off doing it that way. And then we've come to the dogs of the Dow now, which is a more, you're taking the best of the Dow. You're taking the highest yield. So this time, today, we were going to break it down. Instead of paying those expensive prices for those Dow stocks, it didn't make any difference if you already own them. I mean, you've been inherited from your grandmother, whatever, But instead of starting this new, instead of having to spend lots of money on stocks, we're going to do it the micro moment type way. We're just going to do the call, which is a fraction. Now, you do lose when you do that. You don't get the dividend. You're going to lose your dividend, because before, when you own the stock and you get your dividend and you're selling an out of money call just to get that additional income on a monthly basis or weekly basis, you still get the dividend. But in this case, you don't own the stock. You're just doing the call, but you're doing everything right. You take the top tens and they're going to go up, and your returns are going to be huge. But I guess you'd have to factor in how much of a big dividend are you getting. Most times they're only a good dividend is 3%. Usually they're less than that, because the top 10 doesn't even, they don't even count you in the top 10 unless you got over 3%. So, but usually maybe they're 4% or something like that, a really good one. So you're making substantially more doing it this way, even though you don't own the stock, but you are missing out on the dividend. The dividends don't amount to much, So anyhow.
Well, looks like we got a question from James there.
Oh, okay. Yeah, I can't see those on mine today. What's he got to say?
Marcus has it. Perfect.
There it is. Okay.
Or are we going to go over this question next week? Sure.
Yeah, we will. And to tell you where you can go, if you just go to Google and type in dogs a Dow, and there's any number of companies that will give you the dogs a Dow for the start of the last several years. Like they've got them for the start of 2020. They don't have them for the start of 21 yet. But you can see the dogs. You can see which one. There's a 30. They're the best of 30 stocks out there. So, but you can find them there. Okay.
Yeah, I'm looking up those right now. Interesting.
And Martha says, hi, Micah. Great to see you.
Hello.
And okay, that's the only 2 comments so far. So if you have any comments, shoot them up there. We'll discuss them. Tim we had a good day today in the micro moment. We had so far this week on our micro moment trading, which is through today, we're up 78.72109, which is great. We probably tomorrow's our last. I don't know if we're going to break 100. Last Friday we had a huge, and we broke 100, broke over 100. But
did you get that last trade? I
did. You? Yeah.
Okay.
Yeah, it was Apple, and you bought it $1.02 and sold it $1.05.
Yeah, I had one more after that I just sent you 5 minutes ago.
Oh, I haven't seen it. My phone's beeped here several times. I'm sure it's on there. So I had that, but I'll report it tomorrow because this will go out for today's. And I'll report it as in the ones tomorrow. So
yeah,
okay. So Micah, how's everything going over there in the promotion department? I don't know how you keep up with all that stuff. It's confusing.
Yeah, I have a lot of tools to streamline that process for me.
Yeah.
Definitely, because every platform runs a little bit differently, and so you gotta keep up with it. But
Yeah.
once you get used to it, it's pretty streamlined. We've been running some really cool content. The videos have been great. Deshaun and Tim have been giving me great videos. I actually texted them both individually like 2 weeks apart because the way that they speak and how succinct they are and the ideas they are able to round out quickly. I'm able to take really good videos that are only, a minute or two and pull those out of the morning session. And it's a complete thought. It's not like, it's not incomplete or because the actual discussion was for 6 minutes. They're very succinct and able to communicate those things. Yeah.
He was supposed to be here today. He called me just shortly before we went on. He had couldn't be here. But let me tell you what he's doing also, Micah, that's really good. We've always had after the session, I always make that say, hey, send out, get your email, put your name on it so we notify you. And he never did like to come back like that, but he likes to stay and just extend that session and deal with all kinds of questions that typically we don't have time to deal with during the regular session because they're trying to make deals, and it's worked out really well and get really some good comments about that from people. So that's real good. He really, because he goes into really great detail,
Awesome.
He kind of screwed up this week. He shaved off his beard, so he's not going to get he didn't record it, so he's not going to get free McRibs. McDonald's has come back, started yesterday with McRibs again in all 14,000 of the locations. So you can get it for free if you send a picture. Last month was Beard Week or was Beer Month.
Okay.
And so if you cut that beard off and recorded it and sent it to McDonald's, then if you got selected, then we're going to select 10,000 people that they would have group food or whoever it is to deliver the McDonald's thing to your house paid for. You should have known that. You could have taken advantage of it. You would have had to shave off your beard.
I'm a vegetarian today.
I know. We have a question from Eric. Yeah. Okay, Eric. I have noticed in some MM1 trades for QQQ and Apple that the E3 can lag the E4 and the E2 even when the M lines are good. They still have positive results.
Yep.
Want to answer that, Tim?
Yeah, yep, absolutely. That's a great observation, Eric. E2 and E3 are lagging indicators. It takes longer for E3 to kind of catch up with what the market's doing. So you may see E1 and E2 in a good position, but E3 will follow. Okay. It's not really an active indicator that we look at other than on a longer term trend. So typically when results are positive, if you look back, you'll notice that E3 is catching up. So, E1 will cross, E2 will cross, and then eventually, if it's a strong enough move, E3 will cross. But you'll see it kind of round out and get closer. Primarily, we're looking at where E1 is and E2 for backup. But if the move is strong enough, E3 will get there. We'll get there. So, but that's a great question and great observation, Eric.
Yeah, and within that overall cycle, we're so zoomed in. It's also a nice place to keep it a little bit of just overall. It's easy to get caught up in how minute the movements are. So it's nice to keep at least a little bit of tabs on the overall trend of the last few hours, and E3 does that really well.
Mm-hmm.
Exactly. I guess more questions pop them up there. We'll be glad to discussion.
Here's one. Okay. Craig says, can you discuss your transition to trading Apple and what you look for on the charts that has led you to your great successful trades? Yeah. Yep. Absolutely. Great. Another great question, Craig. The reason that I transitioned over to Apple, and I hadn't had a chance to talk to Micah about this yet because I'm kind of dating his ex-girlfriend in a way.
Totally fine. A lot of people are.
Yeah, but you're not abusing her like he did.
Yeah. Primarily, Microsoft was the spreads jumped to a minimum of 5-cent spreads. It was becoming really difficult to trade Microsoft. Just wasn't covering the spreads. And so I started monitoring Apple and saw that, number one, the spreads were really favorable, 1 to 2 cents much of the time. And it had some good, strong moves either side of the line. So went over to Apple. And I originally went over to Microsoft. I was trading Q, and I know Tony was coming back, and Q is traditionally his domain. So I switched over to Microsoft there for a little while and actually did pretty well with Microsoft, but just couldn't justify these 5 to 7 cent spreads anymore. So that's what I did. What do I look for? The same thing I look for in every other stock. I'm looking for where the trend is, where the bias is. Is it going toward the call side where we have red above blue? Is the tick moving up? Are the Bollinger Bands expanding? Is M1 turned up? I look for all those things. I generally do most of my trades outside of the Bollinger Bands. I wait for the tick to move outside the Bollinger Band and keep going. And this is an important distinction. It can move outside the Bollinger Band and it can start to twitch, move up and down. That's an indicator to me that whatever that leg is, it's about to change. It's about to reverse. But if I see a line go straight out that Bollinger Band, not retract, stay and continue to inch its way up, that's a really good indicator that that's a strong trade to get into. And the longer you do this, you get a feel for these different stocks or ETFs. They all kind of have a personality, and like that. I hope that helps.
Okay. Anybody else has anything else here? Randy had called me yesterday and said his wife was scheduled for this operation today, but it was scheduled later. He was going to be able to be here for about an hour, which is fine because we're only on here about 45 minutes. And he called me like just 2 minutes before we hit the button to go on the air here, and said it was a little emergency and he had to leave now. So he apologized and said he'll be back here obviously next Thursday, and we'll go through all that because we got a great presentation. Unfortunately, it's all on his computer because he's got all the stuff to do it. So you can do it.
Yeah, I hope she's okay.
Well, I do too. He didn't say what it was, but he said they had to do it quicker. So I don't know what it was.
Wow.
So.
Okay. Well, our thoughts go out to Randy and his wife.
Yep. Now here's Debbie. What criteria do you use when you pick the specific dollar call? Do you take the delta into consideration, or what? You want to answer that, Tim?
Sure. When you pick something down, okay. Dollar call. Are you talking about picking the particular strike? I'm assuming that's what you mean, is which strike we're looking at. So what we look at in MMT is we are looking for the strike that is closest to being in the money, that has the highest delta and the most volume. I'm looking at Apple right now. I'm looking at the option chain now. I would be looking at the 123 on the call and probably the 123 on the put side. Anyway, it's a simple formula that we kind of figured out after the crash, when we had to kind of calculate everything. And that's where we've ended up at.
Yeah, you got it right. She said yes. She was talking about the strike. So that's
okay.
Good.
Cool.
Okay.
Yep.
And Peter, go ahead, Tim. It's for you.
Did you start out? Yeah. and if so, how is the transition to Microsoft? Well, I'm trading Apple now. I traded Microsoft for a little bit and went to Apple, but Apple has been very good. What we've seen on Apple is after the gap fill, if there is one, there tends to be a strong move, one way or the other, that lasts for a few minutes. And we've been sneaking in and scalping those trades pretty early. Apple seems to calm down pretty quickly after the first 5 minutes. We may get another trade or two in, but seems to be its most active right after the gap fill.
Yeah, I think too. What's somebody asked yesterday during the first session, 8:30 to 9:30 Central Time. Asked yesterday, do you do more than just 1 or 2 stocks? You do a lot of stocks. A lot of stocks qualify, no problem. But the problem is if you just do 1 or 2, like these guys are doing, you get to know them just like a little kid, and makes you much more efficient in kind of feeling them out and knowing which way they're going without having to have got 5 or 10 different stocks. You just don't have that much time, and you shouldn't spend more than an hour in the morning to do it, messing with it anyhow, because you kind of get fuzzy in your skills, sort of, and you can make plenty of money. We've averaged, well, this is tomorrow's the end of the 83rd week. We've been doing those sessions, those micro moment sessions. We've averaged 96.28% over all those weeks. And so you make a lot of money just spending an hour a day. Micah can tell you about that. He did for a long time. And it can wear you out in an hour,
Yeah, very true.
Yeah.
To anybody that's on here for the first time, to clarify, we were talking about the dividend technique. And then we switched to what Tim teaches, which is micro moment, which is very short trades, everything lasting under a minute, which is what I mentioned earlier. So that's why some of the terminology has changed, and we're describing different trades, is because they're very brief trades. But yeah, you have to unwind a lot of what you know about trading, and trader's fatigue really does play into it for sure very quickly because of the hyper focus. I mean, we're zoomed in to see about 20-30 minutes, and it's a minute tick, but it's a live updating minute tick, so you literally see every cent that it moves. You're aware of every cent change of whatever you're trading second by second. So you do have to really focus, but just be good to yourself. It's also not worth it to trade for 5 hours. Like, why do you need to do that?
You can, like I use this statistic all the time. You could use, if you make 6%, follow these guys and learn, because we're not telling you to do their trades, learn how to do it. When you learn it, because you're seeing them go through the charts, which the charts is telling them when to go in and when to go out. You make 6% a week. Now they made much more than that just today. But if you make 6% a week in 2 years, 20 4 weeks, you're going to grow a $2,000 amount to over $800,000. At that point, and I tell people do this with your kids. Don't send them to college the first year. Let them grow up a little bit, and give them $2,000. Open an account, even use virtual money in the account, and let them use your money to get them into this program. Let them learn how to make 6% a week, and at the end of 2 years, they're going to be able to make 6% of 800,000. What's that? $48,000 a week. Let the other 3 weeks stay in there and compound. And people can do it. That's what these guys do. That's what they teach you. Micah, we've Micah, folks out there. Micah prepares a sheet on our website, www.micromomenttrading.com, and it shows the entire schedule of our classes and everything for the rest of the year. And you can read all about them, see what's going on. I have the very first one, what we've given for 20 years now, called our well, it's not Micro Moment, but it's Covered Call Seminar. It's 2 days, this coming up Saturday and Sunday. And Randy will be joining in there, and Tim will be joining in there, and Deshaun will be kind of joining in there, kind of off and on during the course of the 2 days. But that's the basic covered call technique that Randy has based everything, and then Tim is kind of taken and massaged around, and so everybody's involved, and that's why they participate. But it's 2 days, and you can go to the website, and I think if you've had it before, and lots of people, because a lot of people have been doing this with us for 15, 16 years, they're attending for free. We've changed the price structure on that, Mike. I think substantially reduced, or you can still do it for free if you ever did it before, or something like that.
Oh, for the if you've already been there.
Yeah, the 2 days this weekend.
We did send out an email about that, how that policy was changing.
Mm-hmm.
The main reason for that is we're going into different courses. We have new, legitimately new seminars coming out this year that we've never done, and some of them are related to past things we've done, but we're taking a very different approach. So we don't want it to get crossed over, so that's why we're adjusting that policy. But we did send out an email, but I think we're going to have a very low yearly subscription to keep it all so that you can reattend anything. I'm not sure exactly. I don't want to say too much.
Yeah, there's a lot of different things, but essentially, though, if you ever did attend it before, you paid for it, then you can reattend it. And then we've got some special price breaks on a lot of the stuff. I know the micro moment trading sessions we have, like right now, and you get if you go to the website, and you have to get this off the website, but you can sign up for the micro moment trading for 2 weeks free, and then I think there's a reduced price, a substantially reduced price after that if you want to keep going. But you can only do that by going to the website, which is www.micromomenttrading.com. And Micah has a little thing there, and you can see where you have to click onto that to get into that into those sessions for free. Yeah.
I also want to say, we'll answer this question next, but I also want to say, not just to promote social media, but I'm allowed to do social media exclusive sales. And sometimes, like we had a Cyber Monday one, and it was 75% off your first month.
Wow.
There you go.
We had a limit of 5 people. And, we didn't even fill up all the spots. And it was just, there was no strings, no extra month. Yeah. It was 75% off. Like, it's real stuff. And it just, that's the type of stuff we roll through there. So I don't want to.
You know what you need to do? You need to be creative like McDonald's. You should have those, that's too late now, but like, had you known it was National Beard Month, you could say, okay, shave off your beard, and the next 5 people that send me, either all or some of their beard shaved off, then you're going to get this, something like that. Yeah.
You just got to make it more intense, I think.
Yeah. You want to take that tester, Greg?
Sure. But I just got to say that's an amazing deal. Wow.
Crazy.
Wow.
One day I don't know.
Craig says Tesla will be added to S&P after December 18th close, I believe. How do you see that affecting SPY and MMT? Well, I'm not a SPY trader, so I don't know how that will affect things. Micah, do you have some thoughts on that?
Yeah, it's a wild card for sure. In the immediate term, it'll make SPY probably really hard to trade for like 4 days. A lot of the thing in the options market is just equalization. So you have big influences that come and just mess everything up, and then it has to find its new normal. And it really does. It doesn't settle back down to this very standardized thing. I mean, when we saw the pandemic start, the structure of options inherently changed. It was the craziest thing I've ever seen. They moved different. All of the associated numbers were different. Everything was different. It climbed back up. We're obviously at all time highs again, but it was never the same. It always changed after that.
Well, for this morning, because that's getting ready to happen. It wasn't announced the last couple of days, sometime last week. But anyhow, Tesla was up big time pre-market, and it's not on here right now, but on the wire yesterday, I think it was. They said that it should have a significant effect, particularly just on not necessarily the whole market, but just on Tesla. The Tesla could just go crazy, and it already has to some extent. I don't know what happened to Micah. You guys?
My girlfriend's getting some clothes, so I just
want. Oh, okay. Well, what's the deal here? Everything I used to always show on these videos, can't believe it. Hey, James, how do you make sure I'm on the email list? Well, if you will send email to support micromomenttrading.com and just make it address Sue Ann, and she runs the office, and just say, I just want to confirm I'm on the email list for this, that, or the other, and she'll take care of that. So, and go ahead, take that. Go ahead.
Sure. Pat says, looking at the ICE charts at the bottom right shows server time, the time then -6 and a circle. What's the -6 mean? And why is the small circle sometimes green or different color? Great questions. First, I'll take the colored circle. Our programmers have added an extra little feature to this to let us know when the charts are running in real time. So when you have a green light, it means that our charts are running in real time. Yellow means they're lagging slightly, maybe a second or two, and red means that they're lagging significantly. Okay. The time, the -5 means that's well, on mine it's -5. That's -5 Greenwich Mean Time, right? That's how far we are behind England, basically, where Greenwich Mean is established. Why they included that, I'm not sure. Maybe it's just to get an idea of where you are in the world and as it relates to market time.
One quick here on Jim says, Micah, does the same kind of thing appear across the that wasn't the question. Somebody just asked if he's attended the cover call seminar in the past, and he paid for it. No, you can come back for free. Was that Eric? Yeah, it's Eric. Yeah, Eric says, for the covered call seminar, which I took in the past, I can read. Yes, you can. If you paid for it in the past, you can attend it for free, Eric. Yep. Starts at 9 a.m. on Friday and ends up around 3:30 or 4. I mean, it starts on Saturday, 9 a.m., and Sunday the same thing. Both days ends up about 3:30 or 4.
Yeah. Any changes will be going into the new year. So we'll send out that email again with the updated policy, and then it'll be for 2021. Jim says, Micah, does the same content appear across all channels? I'm primarily on Facebook. On Facebook, you're going to get the meat of it. I do some, slight variation, just to keep it a little bit interesting. If people do follow us on everything, I don't want it to be totally boring for them. So I do make exclusive content for each platform and put it up at different times. But Facebook, you're going to get a ton of snapshots, which is the 1 to 2 minute clips of the morning webinars. I do of Tim, had some of Tony and Randy and Deshaun. And then you're going to get the main announcements and things like that. And then some word posts as well. So yeah, you'll be good to go on Facebook.
Yeah. Hey, Mike, I'm not sure we've lost your camera there.
Yeah. Yep.
Okay.
I'll be right back on in a moment.
Okay.
We're going to have to end it up here because we only have 40 minutes, and we're doing the 40 minutes, and I can see our engineer pounding, raving his because I always get in trouble doing this. Well, thank you, everybody. Mike, I appreciate you showing up here, and Tim and myself, of course. And next week we'll have full component. Next Thursday we'll be doing do what we were supposed to do today on Dogs of the Dow, and it's really going to be an interesting seminar, and it's really good. It's going to be good, and we do hope that Randy's wife is going to be just fine.
Yeah.
And Micah, thank you for being here, and Tim, and we will see everybody next Thursday. Okay.
Or if you're MMT, we'll see you tomorrow morning.
See you later. Bye-bye.
Right.
Bye-bye.
Have a great weekend.